Welcome to another episode of Mazars COVID Talks, where we focus on pandemic resilience and we have discussions aimed at supporting business survival by directing organizations to resources and embedding a culture of preparedness. My name is Tashonda and I am a part of the Management, Technology, and Consulting group here at Mazars USA. I'm joined by my co-hosts.
Hi everyone, I'm Alisha. I'm a senior manager in our entrepreneurial business services and advisory group.
Hey, my name is Daniella Miller. I'm a senior consultant for the Mazars Technology Consulting Group.
And today, in our efforts to start diving into this CARES Act that was finally passed yesterday, we're joined by Ryan Vaughan of our tax group. Ryan, would you like to introduce yourself?
Good morning, everyone. Ryan Vaughan. I'm a director in our tax practice. I lead our Chicago office tax group as well as our national tax credits and incentives group. Happy to be with everyone this morning.
Thank you for joining us. We're really looking forward to jumping into this conversation. Before we get started, please remember all information shared on Mazars COVID Talks extends from reputable sources, and the views expressed here are meant to serve as suggestive guidance based on the knowledge and expertise of the co-hosts and guests. So where we usually go into some industry trends and other topics, I think we're going to just bypass all of that today and jump right into it because we have some questions that we're anxious to hear Ryan's expert thoughts on these things. So
yeah, there's a lot of information going out there, Ryan. $2 trillion being given out, so many areas for individuals, for public health, state and local government, for small businesses and big corporations. So I wanted to ask you a question about the small businesses outside of the existing SBA loan program. Do you know what other programs and initiatives that will be available to businesses as a result of the CARES Act funding?
Yeah, so one of the main provisions in the lending area of the CARES Act is the Paycheck Protection Program, which establishes a $349 billion fund through the existing SBA 7A lending program. That's available lending to small businesses defined as having 500 or fewer employees with up to $10 million in lending or 250% of their average monthly payroll cost for the prior year. And those interest rates have been capped at 4%. And really the thought here is to help employers cover these next couple months of potential quarantine and keep the employees in the business, keep the business operating. And to that point, the program has a forgiveness clause that if the amount lended is used towards payroll costs, mortgage interest obligations, rent obligations, utility payments, that portion of 8 weeks of those costs can be forgiven as part of the loan. So it's really it's an interesting approach to getting cash to employers and keeping people employed during this this crisis and pandemic as we weather the impacts.
So that's a really great point, Ryan, and it kind of lends to a couple of questions that I have based on some of the discussion we had last week, where Alisha, you brought some great points about the ranges of businesses that would be impacted in different ways. And I remember there was some discussion about organizations 50 employees or less are impacted different from those of 50 to 500 employees. Can we get into that a little bit?
Yeah, so the SBA typically under their standards of the SBA regulations, they usually look at it in terms of the company's number of employees or average annual receipts, but it does vary by industry. And what we're seeing is that the SBA assigns a size standard based on their industry code, also known as their NAICS code, which you could find on any company tax return. So we have seen that most manufacturing companies with 500 employees or fewer, and most non-manufacturing businesses with annual average gross receipts of under 7.5 million would qualify as a small business. However, we do need to disclose that as it specifically relates to the Small Business Administration in terms of COVID-19 and the disaster loan program, the size of the entity is not used for qualifying the loan, and we at Mazars are encouraging all businesses to apply regardless of the size. And we've had conversations with the SBA, and they're really looking at it on a case-by-case basis. And I think it's also worth noting that there is an online tool that they have on their website where you can put in your industry code or the name of your industry if you don't know your code, and you can put in your gross receipts, and it will come up right away and it'll tell you yes or no. Now that of course doesn't mean that you're approved or not approved, but it gives you a general guideline based on your industry and your gross receipts as to whether or not they would typically look into funding your business.
I have a question. Alisha, do you think that this process is probably going to take long, and because many businesses are going to be applying for this loan?
Yeah, I mean, so, we've been told that they are, moving as fast as they can, of course. That's an interesting question. I had a client who applied a week ago, last Friday, and they had to finish the application on Saturday because there were some forms that needed to be uploaded, and for whatever reason, the system wasn't allowing us to upload, so he emailed them on Saturday, and the application was complete. Well, we had other clients this week who were applying, and they couldn't get onto the same online portal that I was on. So I think naturally the system is being bogged down with so many people applying, and so they actually changed the application process, and now it's more of a drop in the box when you go online, as opposed to logging on and filling in the questions online. So I think that they're doing everything that they can. Their goal, we've been told, is to process applications within 2 to 3 weeks.
Oh, that's great information. Thank you for that, Alisha.
Of course.
And to that timing point, with the Paycheck Protection Program, approved 7A lenders, existing approved 7A lenders, which may be your current bank contact, have been authorized to accelerate that process through them. And that's again an effort, kind of to Alisha's point, to alleviate the SBA traffic and potentially push that down to some of the commercial banks and accelerate the time of cash to the companies. So we are, in addition to applying, we're encouraging our clients to talk to their banks and see if their bank is already working with the SBA, as that may accelerate the funding as well.
Yeah, and there's one more point I did want to bring up, that they did add an emergency grant in there as well. So an emergency grant is established to let an eligible entity who has applied for the COVID SBA loan to request an advance on the loan. It's not to be more than $10,000. But should they qualify, the SBA will actually distribute that $10,000 to them within 3 days.
I guess there was one other thing I was hoping we could debunk that we've talked about previously, which was how small and medium tier organizations were distressed about having to support employees that were stuck at home while simultaneously having to support new employees, possibly for 12 weeks. And Ryan, some of the information that you shared, it sounds like we're getting into potentially alleviating some of that stress. Is that the case?
That's right, and that's part of the loan forgiveness process of the Paycheck Protection Program, in forgiving amounts paid for salary during this covered period, which is through June 30th. And so that's one provision. And there's also been the Family First Act that was passed to alleviate payroll tax and issue a payroll tax credit to employers for paid sick leave, as well as other provisions within the CARES Act to defer the payment of payroll taxes, and in addition, a 50% credit for payroll taxes paid. One of the focuses, again, seems to be on keeping those people employed and keeping those wages going out during this lockdown or quarantine.
That's good stuff. And thank you for just clarifying that, because even as, you know, each one of these new laws are being passed, more questions and more questions are arising as to what can we do, how can we thrive, what does success look like, how can we stop reacting and start being proactive. Yeah. So we did have just a couple other things we wanted to dive into, with there being so many details covered in this 247-page bill. And some will become more pertinent than others during the response and recovery phases of the crisis. If you could leave businesses and those listening with 3 subject areas of the CARES Act to start focusing on today, what would those be?
So I think kind of go back to the Paycheck Protection Program and kind of what we're seeing as an overarching theme is keeping people employed, keeping the businesses ready for when this is lifted. Hopefully, we can go back to business as usual as soon as possible. And what we're seeing in the CARES Act is ways to provide that is the funding measures. The Payroll Protection Act, as well as the emergency grants that Alisha mentioned. And there's other programs that private banks and private institutions have issued to help cover this period. So funding, I guess, would be the first area. The second, again, goes to that payroll aspect, and that's the payroll tax relief. The deferral of payroll tax payments under the CARES Act. There's a 50% credit available that's refundable for payroll taxes paid through the end of the year, as well as under the Families First Act, there's the sick leave payroll tax credit available, which is also refundable. And that's all, you know, really falling under that umbrella of keeping people ready for business once we can reopen. And the third point, and kind of the third area covered in the CARES Act is the income tax provisions. Some of the changes, the CARES Act temporarily suspends or changes some of the tax provisions from the Tax Cuts and Jobs Act. Specifically allowing net operating losses to be carried back, as well as offset 100% of taxable income, removing the 80% limitation and the no carrybacks that the Tax Cuts and Jobs Act had implied. AMT credits are eligible to be accelerated into the entire amount into 2018 or 2019. The threshold for the interest deduction limitation was raised from 30% to 50%. And the retail glitch was fixed from the Tax Cuts and Jobs Act, and that was for qualified improvement property. The Tax Cuts and Jobs Act had not qualified improvement property as 15-year property, which excluded it from bonus depreciation. So that's fixed in this act, which should allow retailers, restaurants, real estate companies to really recover some of that depreciation, potentially generate a net operating loss, carry it back, accelerate cash flow related to your income tax. And another nice thing as part of the income tax provisions is all of these have been retroactive to 2019. So for those taxpayers that have not filed yet, you can make these changes on your 2019 return, whether that be through a method change or or otherwise, but that'll allow you to accelerate the cash to now when you file your 2019 return, rather than waiting till April of 2021 when you would file your 2020 return. So to recap, we're looking at the funding. To recap to your 3 points, we're looking at funding available, payroll tax relief, and income tax relief as really the main 3 areas for companies to look as part of the CARES Act.
We really thank you, Ryan. One of the things we always like to do with Mazars COVID Talks is close with a note on personal preparedness. And you said something as we were talking about this previously, and you were talking about how the CARES Act, you know, the big deal about this is that it's going to keep businesses somewhat operational so that when the quarantine is lifted, we can get back to business immediately. So I'm wondering, for our note on personal preparedness, what would be a key point from the CARES Act for individuals to focus on? And some of it could be, I think some of it will be, you know, a lot of what you already spoke about. But if you had to just give one thing to individuals, being that you've dived so deeply into this thing, what would that be?
So for individuals, there's a unique provision allowing for really the direct payment or credit to individuals, $1,200 for a single person, $2,400 for married filing jointly, with a $500 per child claim. So you're looking at your average family of 4 potentially receiving $3,400 in this rebate. There are some limits. It phases out for individuals with income exceeding $99,000. Head of household is $146,500 is the phase out, and for married filing jointly, it's $198,000. But this is another way that we're looking to get cash into people's pockets so they can continue to spend money now, as well as continue to do it once the doors open back up and the lights come on and we're able to, you know, try to return to normal. So really looking to keep people covered during this period and provide a little bit of a stopgap. So making sure you're taking advantage of those. As well as there's some provisions related to retirement income, withdrawals of 401k up to 100,000 have removing the 10% penalty. Required minimum distributions can be waived during 2020. An increase to the charitable contributions for non-itemized filers, as well as employers being able to pay employees student loans up to $5,250 that is going to be tax-free to those students. So, you know, as an individual, you want to make sure that you're understanding, capturing these, talking to your tax professional, so you can take advantage and maintain while, you know, we weather this pandemic.
Thank you. And just to clarify, because I've gotten a few questions on this, this is based on a fiscal year 2018 return for people who are rushing to do 2019 returns. Is that correct?
It's based on your 19 if you have filed, but if you have not filed 19, it would be based on your 18. That's right. That's right.
Thank you.
And I know the goal is for people who electronically filed to get that money pushed out. Treasury Secretary Mnuchin had said in 3 weeks. I think that's aggressive, but we'll see what happens.
We're all hopeful, right?
Yes, exactly. Yeah.
Definitely. We want to thank everyone for joining us for another episode of Mazars COVID Talks, and thank Ryan.
Thank you, Ryan. You answered so many questions.
Thank you, Ryan. This was great.
Thank you. Thank you.
Please, for this and other resourceful information, please visit our page at www.mazarsusa, that's MAZARSUSA.com/COVID-19, COVID-19, where we host a ton of resourceful information on coronavirus, and up-to-date lists of regulatory responses, state-specific tax filing guidance, and a 10-point framework on organizational resilience. Please remember that all information shared on Mazars COVID Talks extends from reputable sources. The views expressed here are meant to serve as suggestive guidance based on the knowledge and expertise of the co-hosts and guests. Thank you again.
Thanks, guys.
Thank you, everyone.